Oh, look, well, you see gold prices today? Where they go up? 21 bucks? And what's one of your top trends? Oh, a golden year for gold? Now, how much is gold up since we made that forecast? Oh, only about $500. Let's see, it closed at 2,516. And how about oil prices? They're in the toilet. They're down like $8. They're like $72 a barrel for Brent crude. Why? Because the economy's going down. Crypto taking a bit of a hit. It's down to 56,000, but we still say it's in a strong position right now.
Gold prices have risen to $2,516 per ounce, and Gerald Celente expects further increases as economic conditions continue to weaken. Oil prices have dropped to $72 per barrel due to slowing global demand, and cryptocurrencies have also seen a decline, though they remain relatively stable. According to Celente, the U.S. is experiencing dragflation, where the economy slows while inflation rises. Manufacturing contracted in August, with the PMI hitting its lowest level since November, and private payroll growth was the weakest since 2021. These trends signal deeper economic problems that are being underreported by mainstream media. Globally, China's economy is facing slowing growth, and the Bank of Canada has cut interest rates for the third time this year. Commercial real estate is also under pressure, with rising vacancy rates and falling values further highlighting the fragility of the global economy. Celente warns that these are clear signs of worsening economic conditions and urges people to pay attention to these trends to better prepare for the challenges ahead. Now we'll show you the best clips of the latest show, but first, hit the like button, smash the subscribe button, and turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
Crypto is a gambling game, and we don't give financial advice. The motto of the Trends Journal is think for yourself. We tell you we give you our analysis and our forecasts of the current events forming future trends. But gold is a golden year for gold, and it ain't going to stop. We don't see it happening. As a matter of fact, there was an article that came out by Kitco. Even as gold prices set new all-time high, net purchases by central banks more than doubled to 37 tons in July. You know why? They know how bad everything is. And what the mainstream media is giving you nothing more than stupid,
that was bullshit.
Total fucking bullshit to sell their shit. Don't forget, be a good boy and girl, swallow their shit. So the Dow fell 200 points. S&P posts third straight loss as growth fears plague investors. And that's according to the language of CNBC. Growth fears plague investors. Fucking gamblers. What the fuck are you talking about? 3 companies own, 88% of the S&P 500. BlackRock, Vanguard, and State Street. So the Dow dipped, S&P dipped, NASDAQ just gained a little bit. And what happened was that the numbers came out. Private payrolls showed the weakest growth since 2021. Oh, the weakest growth since 2021? You mean at the height of the COVID war, when they were scaring the shit out of everybody and forcing businesses to close down? And you're saying that that's what payroll data shows? Again, we warned you about we're going into dragflation, declining economy, and rising inflation. Inflation is going to go up as they lower interest rates. This isn't rocket science. And it's also important to understand, the lower interest rates go, the lower the dollar falls, and the higher gold prices go. Simple as that. Survey shows contraction in U.S. manufacturing. U.S. manufacturing contracted in August. The Institute for Supply Management survey on Tuesday also showed manufacturers continue to pay higher prices for inputs last month? Oh, higher prices, inflation, dragflation. Here, the numbers. The ISM said its manufacturing PMI was at 47.2. That's the lowest reading since November. So a reading below 50 is contraction. The numbers are there, but they're not reporting this stuff.
In today's news recap, silver rises on hopes of deeper U.S. Fed, rate cutting cycle expectations. Silver prices surged by 1.66%, driven by growing expectations of a deeper U.S. Federal Reserve rate cut cycle, which could start as early as this month. U.S. job openings dropped to a 3.5-year low in July, signaling a cooling labor market, further fueling speculation of an imminent rate cut. According to the CME FedWatch tool, there is a 57% chance of a 25 basis point cut and a 43% chance of a 50 basis point reduction in the upcoming Fed meeting. Additional data revealed that U.S. employers cut almost 76,000 in August 2024, the highest in 5 months, while private businesses added only 99,000 jobs, well below expectations of 145,000. These figures reinforce the view that the U.S. labor market is softening, adding momentum to rate cut speculations. India's silver imports are on track to nearly double this year, driven by demand from the solar panel and electronics industries, along with increased investor interest. India, the world's largest silver consumer, imported tons of silver in the first half of 2024, a significant jump from a year ago. This surge in imports is attributed to stockpiling by industrial buyers to guard against potential price increases. Technically, the silver market is seeing short covering, with open interest down by almost 10%. Now we'll show you the best clips of the latest interview, but first, hit the like button, smash the subscribe button, and turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
And they barely do when they do. U.S. job vacancies slide to lowest level since 2021. There were 7.7 million job vacancies in July, according to the Labor Department's Job Openings and Labor Turnover Survey. That was down from 7.9 million in June and the lowest since January 2021. All right? The height of the COVID war. August private payrolls rose by 99,000, the smallest gain since 2021. And then according to Challenger Gray and Christmas, job openings in July touched their lowest point again since January 2021. That's the height of the COVID war when everything's locked down. But barely not reported at all it's in the mainstream media. You got to go to some of the business news reporting it, but hardly anything there. Oil copper fall as Goldman warns of weakening demand in China. Dr. Copper, you got to look at copper prices because copper is used in everything from high tech to heavy industry. And again, warning about weakening demand in China. Every week we've been doing reports on China's economy in the Trends Journal. And now an article just came out today on Financial Times. Investment bank cuts China's growth forecast. No shit. And we're only talking about a country of 1.4 billion people. America, 332 million. What does Europe have? Another about 400 million. We're talking a country 1.4 billion. So the implications of this are wide and deep. So the Bank of Canada cut its rate for the third straight time. The last time the Bank of Canada cut interest rates in 3 consecutive decisions was 2009. Oh, the Great Recession. Yeah. This is serious what's going on. And again, interest rates are going to go down. The dollar's going to go down. and gold prices are going to go up. Turkish growth problems, again, on the global economy. But hey, did you hear about those people that died in that yacht? And who's Penis Cheney's daughter going to vote for? Oh, and the Olympics, whatever they fucking play, tennis, whatever the Olympics are over. The other thing, the tennis game. You ready? Hong Kong property deals slump. Yep. As market boosting measures wear off. Real estate deals comprising new and lived-in homes, office units, car parking slots, shops, and industrial spaces fell 10% month to month and declined by 33% from 6 months ago. You're not reading that in the Wall Street Journal. This is from Politico. Came out a couple of days ago. Ticking time bomb, plunging office values alarm Washington.
What do you think of Celente's predictions? Is he spot on? Do you disagree with him? Post in the comments section your honest opinion and share with the stackers if you're preparing for a major recession in the upcoming months. Now check this video right here and I'll see you on the other side.